Hello everyone, this is Hadi Mansouri from Mansouri Immigration Firm in Vancouver BC. I'd like to give you some detail and background about how to open a branch or an office of your business in Canada while you still have the original business or the main affiliate in your home country. One of the most used programs and pathways in this category is called intra-company transfer. In this situation, you have two companies, basically two legal entities, one of which is incorporated or non-incorporated business venture, which has its own definitions back home, for example, let's say in Guatemala, and the other corporation is being registered and incorporated under the laws of Canada and is carrying on business, opening office space, etc., inside one of the provinces in Canada. In the intra-company transfer category, there needs to be a proper relationship of subsidiary, parenthood, or affiliation between the two entities. So that each of these entities does not necessarily have to be an incorporation. For example, your business in Guatemala can have been a sole proprietorship business, meaning it's a self-employed situation, you're working for yourself, you file the taxes and income of your business that you carry under your own personal name. So you're, so to speak, mixing the income of your business back home and your personal income, and you're filing taxes. However, you have a name for your business, you have proper bookkeeping, you have proper invoicing, proper list of your customers, you have a place of business, etc. You can still call this a business, a venture. You can also call an incorporated business that's carrying on business a venture. Similar here to Canada. If you have a sole proprietorship business or if you have an incorporated business, you can still call it a venture. So these two need to have a proper relationship. One of the two, either one of the two should be the main owner of the other, meaning have more than 50% ownership and control over the other business. An example would be the Guatemalan business as a corporation owns the corporation in Canada with through common shares and voting shares, etc. So that business out of Canada has the main ownership of more than 50% of the Canadian business, or vice versa. If the Canadian business has ownership, main or majority ownership in the Guatemalan business. This is one situation where we call the owner business the parent and the business that's being owned the subsidiary of the other venture. The other form of business that is accepted under the intra-company transfer is affiliation. Affiliation means the owners, the main owners, more than 50% again, and controller of the business is the same person, either a human being person or a legal person, such as a business corporation, such as a trust, such as a holding company, which is again like a person, like a different entity. It's just not a human being, but in the capacity of owning businesses and taking on ventures and transactions, it's still acting in a capacity of like a legal person. So this situation, we call it affiliation. But we have to make sure that more than 50% ownership of both of these companies belongs to the same entity, person or corporation otherwise. So you have one of the two situations, you have your both companies. Now you need to have proper business relationship, meaning the two businesses need to be similar in nature or have similar transactions, similar services, similar products. And most importantly, these two need to be helping each other grow and help each other be successful and growing and basically making more money. So it can't be a situation where the Guatemalan business is a trade business with export and import, whereas the Canadian business is a language school. So these two have no similarities. They're not helping each other. The existence of the Canadian office or branch or subsidiary or affiliate needs to be directly and significantly, visibly, tangibly helping the other business in in the country of origin be better and progress and prosper, and vice versa. The existence of the out of Canada company must be important and vital to the Canadian branch or Canadian corporation. So once all of these are met, then you need to have a proper business plan in place. You need to be able to draw and illustrate for the officer, for the immigration officer, as to what exactly your plans are. Why is the Canadian corporation being incorporated? Why does it want to start business? How does it want to go about running and starting its business? Does it have a like a proper physical place it has leased, or not yet because it's waiting for the manager to arrive so that they can start? Or have they opened a bank account? Have they hired? What is your hiring plans? How are you going to go about having a positive impact on the Canadian local labor market? How are you going to hire Canadians and permanent residents of Canada? How are you going to benefit the Canadian ecosystem, or have a cultural impact, or like a significant, meaningful business and economic impact on Canada? Are you going to create more jobs? Are you opening a business that is serving an underserved or otherwise remote area where competition is less, or you're coming up with new and innovative ideas of offering services and products in a different way than it is already being offered in the Canadian market? So the business plan is, again, important. To back up the business plan, you need to show that you have enough financial resources to dedicate to the business to get up on its feet and be able to prosper again, until such time that it generates enough revenue in Canada that it can start becoming more self-independent and self-sufficient, if you will. So once you have all of these in place, now we want to see who you are planning to send as an intra-company transferee from the Guatemalan or otherwise other country, home country business to the Canadian business temporarily. This program is only for a maximum duration of 7 years. The first time your intra-company transferee applies for a work permit, depending on the discretion of the officer, the Canadian officer, a work permit may be issued with a validity of between 1 to 3 years. When that person arrives to Canada, after the end of duration of their work permit, when they are about to renew, if the company still needs them, when they're about to renew their work permit, again, the officers take a look at when they came, what they've done, what impact they've done on the business, what the business has done, how the business has been maneuvering in the Canadian ecosystem. And if they're satisfied, the work permit will be renewed only up to 7 years. If the intra-company transferee plans to live here permanently, there are plenty of different programs with the federal or otherwise provincial governments that offer permanent residency pathways, such as express entry, as many of you might know, such as Canadian experience class, such as provincial nominee classes, and more. If applicable, rural northern programs like Atlantic programs, different federal and provincial programs, as I said. These explanations do not apply to Quebec. The explanations that I'm offering in this video only apply to other provinces, basically every province and territory in Canada, because this is a federal program. My explanations do not apply to the province of Quebec. There might be situations for intra-company transfers to Quebec, but they don't concern our firm and our practice, so I'm not going to go into too much detail about those pathways. So depending on what sort of employee you're transferring to the Canadian branch, you need to be able to show why this person is vital, why this person's presence in the Canadian branch is crucial to the success of the business. Typically, you can only send managers or highly skilled or specifically skilled individuals. Basically, you're telling the Canadian government that my office in Canada will not be able to start progressing and start getting up on its feet without the presence of this or these particular persons that are unique in the nature of what they do, in the nature of their skills and their education or background or their capabilities, that it's extremely either impossible or extremely difficult for me to source these types of talents in Canada. that person must have worked for more than 12 months, more than a year, out of the last 3 years in the original company back home. So you can't just nominate anyone. That person must have been working for your business back home for more than a year, because the trust and the collaboration, everything has been built between you guys. Then you can send that person to Canada. There are many different intra-company transfer situations that legally we can go about for you, depending on a number of factors, the most important of which is the country of nationality of that person being transferred to Canada. Because Canada has a lot of treaties and international agreements, such as free trade agreements, with different countries. For example, if you're from Australia, the type of business plan and the requirements of satisfying the officers is different than if you're from, for example, India. If you're from Mexico, or if you're from Chile, the requirements are different, because the codes and the agreements that we go focusing on and drawing our application and writing our drafting our business plan, everything differs. So we have a lot of different codes of intra-company transfer applications at our disposal, depending on where the applicant comes from and which citizenship they have. We can choose the best option for them, for higher chance of approval of the work permit, for having an easier time, or having an easier threshold, if you will, for satisfying the officer with the level of significance of impact that the business will have on the Canadian market, be it, as I said, cultural, economical, financial, employment-wise, underserved communities, etc., etc. For some countries, it's harder. For some countries, it's much easier. Again, the amount of financial resources that is being shown and is being dedicated to back up the business plan significantly, again, differs from class to class. But the basics of the minimum requirements and the foundation of the intra-company transfer are almost all of it is what I explained in this short video. Obviously, there is a lot more to the details, but I just wanted to give you a brief background so you understand how the situation works here. Another common question that we get is, can the intra-company transferee be the owner of the either or both businesses? And the answer is yes. You can always be the owner of both businesses, because businesses are independently work. Businesses are different entities than yourself. So if you're the main owner or the sole owner of either or both of these businesses, that's fine. As long as you meet the criteria, as long as your presence is unique and is significantly important to the starting of the business. Yeah, these were as much as I needed to speak in this short video. If you need more information, we're always happy to answer your questions here. And thank you so much for watching. In another video, or in other videos, our firm, and including myself, we will try to come up with more educational, informative videos so that you can understand what different immigration, like permanent immigration pathways, are available for intra-company transferees. And if you don't meet the intra-company transfer criteria, you want to open a branch or a new business in Canada, what other programs, either federal, provincial, or otherwise territorial, are available for you. So thank you very much for watching. Have a great day.